Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, August 19th, 2010. This morning I'm talking about the Titanic economy, and I'm referring here to the U.S. economy. Well, why do I say that? Well, it's not getting any better, folks. Just trying to be honest here. Initial jobless claims came in this morning. They rose to 500,000, which was higher than expectations. The unemployment rate here in the U.S. is not falling. All right, now, we had this huge stimulus program. We were told it was going to help employment. It's not. It hasn't. It won't. Okay, the only reason the unemployment rate is not going higher is because just as many people who are added each month with the initial claims, okay, are as many people as fall off, meaning they can't claim any longer. So we've got this situation where no jobs are being added. Well, the question is, well, why? Why is nobody adding jobs? All you hear about is cash-rich corporations that are not adding jobs. Well, it comes down to one thing and one thing alone, and that's policy out of Washington, D.C. Now, I'm not going to point fingers at individuals. I'm not going to say, X, Y, Z, or he's responsible, but we know who's in charge. And when you look at the policies coming out of D.C. that are so anti-business that it's better for companies to actually lay off people to raise earnings than to try and expand, you know that there's a problem. Okay, financial regulation, future tax hikes down the road, this health care bill, which nobody knows how it's going to affect hiring employees, have all caused corporations to stop hiring. And that's unfortunate. So what I'm looking at here is I'm looking at a chart of USD versus CAD. This is the loonie. You can see that to start off the morning, going into that initial jobless claims figures, there was a little bit of risk taking. Loonie was moving higher. Then all of a sudden, boom, right here at 8:30, bad numbers come in, and dollar strengthens versus the loonie. Well, why so high versus the loonie? Well, Canada gets affected by, the U.S. economy more so than a lot of other economies, being that we are the number one receiver of their exports. All right. Also going on in Canada is that they're already starting to see some problems here. Their wholesale figures were down 0.3% versus an expectation of a rise of 0.4%. So they're going to have CPI data tomorrow. We're going to have to see what happens there. But if the U.S. is in trouble, that could mean trouble for Canada as well. Just want to flip switches here real quick. We're going to move over to the pound. Pound's higher. Retail sales figures in the UK came in much better than expected. They were expecting a 0.2% rise. They got a 0.9% rise, and as you can see here, the pound versus dollar took off as a result, and it's still continuing to float a little bit higher here based on the dollar weakness we're seeing. Now, I've been calling out 155 as a near-term bottom, and as you can see, it held in the overnight trade as well. Also going on, Eurozone. All right, you can see the euro, that moved higher on the initial jobless claims. That's all due to anti-dollar sentiment. Now, the Bundesbank in Germany, they actually increased their economic forecasts for German growth from 1.9% to 3%. So Germany's rocking, and they're carrying Europe right now. I mean, it was only 3 months ago that people were predicting the collapse of the eurozone, and within that time, they've actually restored confidence to the marketplace. Meanwhile, here in the U.S., okay, we've been on this path to nowhere for some time now, and as each day goes by, the market gets less and less enamored with the U.S. dollar. Were it not for the risk aversion trade, which we can sort of see here in the Aussie kind of flipped over. You can see that big bar right there. Were it not for risk aversion, all right, the dollar might be worth a whole heck of a lot less. So that's really what we're looking at here. We can see that also to show you real quick, dollar versus yen. All right, moving back down to that 85 level of support, and recently the intervention talk in Japan has been decreasing, and it may be a problem for Japan to try and go ahead and intervene. I mean, it's one thing if they are fighting currency manipulation or a one-time blip or something like that, but they're actually fighting, or if they attempt to intervene, they're going to be fighting bad U.S. monetary policy and fiscal policy, and it doesn't look like anybody's willing to change that anytime soon. So it all comes down to this, is that, we're on a ship here, and we're moving forward, and we're looking at an iceberg. And everybody's wondering when the captain of the ship's going to, change course. But the guy seems to be clueless and oblivious to what's going on around him. I don't know if he's too busy doing other things or whatever the case may be, but if this course doesn't change, it might be time to jump ship. Now I try and stay out of the politics, although frequent viewers of this blog know where I stand, but it's really becoming more and more evident as each day goes by that Washington, D.C. is the impediment to the economy right now and a hindrance, and they are not helping in any means whatsoever. Now, the stimulus package, is hasn't done anything for unemployment. Right now, they're doing the accounting tricks, gimmicks, and massaging the numbers to try and make you think that the economy's okay. But in reality, that hasn't been working. So when that doesn't work, what do? Well, they're going to point the finger. They're going to tell you, oh, look what we stepped into, and it was somebody else's fault. Well, guess what? I'm here to point the finger today. And you know what? I'm not even going to point it at Washington, D.C. We already know who the clowns are down there. I'm going to point it at the iceberg. I'm going to say, look, if these things don't change up pretty soon, we're going to have a big problem here in the U.S. And unless something's done to take care of that, we just might be on a sinking ship. So that's what I'm looking at today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.